All right, it's Friday, so I want to give another touch base on ULTY. This is a recent one that I've added. First news, it is going to weekly. It's always been a weekly pair, but it's going to go to a weekly Thursday paying. So it's going to declare on Tuesday, go ex-dividend on Wednesday, and then pay on Thursday. So people got a lot of these funds. ULTY, you'll get paid a day earlier than some of your other funds. There's a group of funds that will pay on Thursday, and then a lot of the single stocks will pay on Friday. But ULTY, if we take a look here, I think a lot of people are familiar with it. It's down today. ULMax did just have a comment on their X account saying specifically that, did you know that ULTY currently has a protective puts in all of its stock positions? I just wanted to show that, basically what positions they own, and then additionally the protective puts that are on all of them, which is, I guess, a nice thing today with the market taking a bit of a downward spin following the tariff news on China and the rare earth minerals not being shared. We'll see how that goes, but the impacts on the markets right now are to the downside. But ULTY, I guess, jumping into the in-depth, let's take a look at it right now. It's saying it's down slightly, or it's down to 1.28%, not slightly, but slightly in today's market, especially when you consider the stocks they own are very volatile. So jumping in right away, this is like up to date as of today, I believe, or last time ULMax published their distributions for ULTY, which is usually on a daily basis. Rocket Lab's the most, one they had the most in, then Palantir, CoreWeave, Hood, and Coinbase may pretty much make the top five, although the top, let's see, 3, 4, 5, the top 8 here, including Getty, the quantum computer, SMR, and Hims and Hers, make up the top 8, which they have about $160 million plus in each of those 8. And then these bottom ones here, less than that. But overall, it looks like they got about 5, 8, 10, 12, 14, 16, 18, 20, 22 or so stocks that they're currently invested in. So status, I did present this the other day. I was thinking of a way to make it better to understand. So if you look at this one here, this basically shows a lot going on. But on the x-axis here, we got all the stocks that's invested in. And then basically what this shows is it shows the calls and puts that they have bought and sold respectively. But if you want to just focus on the puts, so you can see over here, I take the puts out. So this basically shows how this fund structure. They buy into the stock, and then they buy protected puts on basically all their positions. So anything above the 0K means stuff that they have bought. Anything below the 0K means stuff they have sold. So basically you can see stuff they have sold, it usually means like here for a firm, they have a put bought at 71, but then sold at 66. So they still got downward protection, just rather than have downward protection at 0, they only have downward protection at 66, and they start taking on the losses again. So basically anywhere they got the put sold, it means instead of just buying a put, they buy a put and then at a lower price, they also sell a put, basically limiting their downside protection to a certain amount. Another example would be here for RKT. They had the put bought at 15, but then sold at 14. So they take that protective put for $1 share in the stock price. And another example would be Upstart. They got the put bought at 47, but then sold at 42. So they're taking $5 of downside protection. Why would you do that? That, of course, is just buying the put. It costs X. When you sell the put, I guess you get a lower amount, something lower than X back. So rather than spending X, you spend X minus whatever you get back. So there's a less capital involved in the investment process for buying the downward protection if you limit your downward protection to just a certain span. But this is how they look. They are true. ULMax does say that they have protective puts on all their stock positions, and indeed they do. Not all of these actually even have stock positions. I'm trying to see here. As I noted last time, if you go to status contracts here, I've got everything selected except for the cash position, of course, because that's not in focus right now. But for anything where there's 3 columns, so you see a firm, the first one shows how many contracts they have collateral from buying the stock. So they got 7,500 contracts. What that means is they got 750,000 shares. Divide that by 100 gives them 7,500 contracts. And then they use that to sell 7,500 contracts on the put at 80 strike. And they also buy the downward protection. But on a firm, they're only buying the band of downward protection from 71 to 66. So that's usually the strategy they're taking on most of these, as you can see. In some cases, like BMNR, they don't sell their calls all at one strike price. They sold one at 61, they sold one at 59. They additionally bought the puts. And in this case, they didn't just buy puts at one strike either. They bought some put protection at 52, and they bought some more put protection at 51.50. But in this case, CNC, so here they're not even buying the stock at all. You can just see all they have is puts. So they bought the 37.50 put, but then sold the 39 put. This is basically they're selling a put spread and taking in premium, because they're basically selling it at 39, but then buying it at 37.50. So I just want to check what the price on this CNC is right now, because we are at the end of the week. And yeah, this has turned out to be a money loser actually for him, because just looking at the chart over here, while the market is of course down today, but CNC came in at about 39 and it's currently at 36.28. So basically whatever premium they got, they're going to have to basically close this about $1.50 a share in the red, because CNC is trading less than the put. Luckily they did buy the put protection, so they did limit their losses on this. But the strategy to gain premium definitely did not work for them in the market today. But yeah, going through here, GLXY is another one where they did that put thing where they basically bought the put at 38 but sold it at 39.50. So they took $1.50 of share of risk, and I'd have to go look at the trade to see exactly what premium they brought in. But Galaxy is currently at 40.33. We'll see how it ends. But this one currently is looking like it might expire worthless, so any premium taken in there will be kept. But yeah, going through these, that's basically the strategy of ULTY, is they basically buy stock, use that as collateral to sell the calls, but then buy downward protection. And open, for example, I guess I do got the stock price. If you hover over the stock, and the strike price is not actually a strike price. It was the last stock price that they had, which in this case might be off by a little bit because there's been such a move in the market. But you see open was at 8 and they sold it at 9, and they bought puts at 7.50 and 8. Usually they try to get more call premium or more premium from the call they sold from what they spend for the put protection. They're therefore getting that leeway to pay you a distribution on a weekly basis. But yeah, I'll keep this updated. I don't know if you find it useful or not. It really just breaks down what they're doing. I have it in terms of market value too. Given the recent move in the market, this might update drastically, but you can see what contracts for them have value still and which ones don't. So you can see, like in the case of PLTR, the calls had value, the puts that they bought were going down to 0. So that you'd expect that when the stock price is going higher. But yeah, you got the market value. This is the screen I referenced earlier, looking at the puts. You can also look at the calls. And you can see in this case, they're not buying any calls, they're not any credit spreads. They're basically, all their calls they're doing, they're selling. There's no buying. There's no credit spreads to the upside. Like a lot of their single stock ETFs, they like to do the credit spread, so they do capture some upside value. And then finally, you can see where they're looking at from basis of stock price. So you can see where they have their calls sold and bought respectively, or their calls and puts sold and their puts bought respectively. But yeah, that's a quick update on ULTY. Thanks.